Welcome back, my awesome accounting students. Today we're going to discuss the second part of chapter 14. And you'll notice by reviewing the agenda that most of what we'll discuss today is actually a review of what we covered on day 1. So let's get started. Remember that all the materials for your class can be located in the modules link within Canvas. There you will find the agenda, you will find the PowerPoint slides, you will see handouts, and you will see the Excel files that have the day's exercises and problems that we'll be covering. So let's jump in. On the screen you'll see the schedule of cost of goods manufactured. You'll remember this from our last class period. We decided we were going to take a T-account approach. We did this for several reasons. The main one being that I think that a picture is worth 1,000 words. And so if we invest the time on the front end of learning how the costs accumulate in a cost accounting system, and we do it using T-accounts, things that we'll be doing later on, including journal entries and financial statements, will be much easier for you. So although your homework will not require it, I would again strongly urge you to consider using a T-account format to help you learn the basics in these foundational cost accumulation chapters. So again, on the screen, you'll see that the schedule of cost of goods manufactured is basically the 3 product costs that we learned about last time, added together and adjusted for the WIP inventory accounts. So once again, last time we learned that direct materials were those materials used in the manufacturing process to produce products. Specifically, we were looking for the direct materials used. And once again, we fell back on a T-accounts to show us how to calculate that. The second manufacturing cost that we worked on last time was direct labor, the touch or dirty hand labor. What I mean by that is I want you to envision assembly line workers actually getting their hands dirty on the assembly line. If they're touching the product and they're creating the product, then the cost of that labor is considered direct labor. And the third product cost that we learned about last time was factory overhead. Factory overhead is that catch-22 product costs, which means they are, by their very nature, indirect product costs other than direct materials and direct labor. So it's, again, a catch-all net of all the manufacturing costs that are not materials and labor. We went through several exercises last time to give you examples of those. We added up the 3 product costs, direct materials, direct labor, and factory overhead, and that gave us the total manufacturing costs. And then we tweaked it for inventory, which means we added the beginning WIP and we took out the ending WIP, and that gave us the cost of goods manufactured. This is a critical component whose information is going to be transferred to the income statement. So if you haven't practiced this after the first lecture, I would encourage you to do that before we move on ahead. The next slide shows the formal manufacturing statement. And you'll notice that there's 4 parts on this statement. Part 1 is for the direct materials used. Part 2 is for the direct labor. Part 3 is for the factory overhead. And finally, you'll see the beginning and ending WIP balances adjusted. This slide shows some of the key calculations in the schedule of cost of goods manufactured that we just looked at. You'll notice here, and I mentioned this on the previous slide, that this is simply, and I'm trying to break it down in as simple terms as I possibly can. The schedule of cost of goods manufactured is simply the manufacturing costs, the 3 costs that we talked about in the last lecture, tweaked for beginning and ending WIP. That's all it is. So if you have a picture in your mind of how the T accounts work, you'll be able to crank out this statement with little difficulty. Let's move on and see an example of what that statement would look like. So over here you see the schedule of costs of goods manufactured in a summarized form. And what I mean by a summarized form is the direct materials used is not itemized like we saw last time, and the factory overhead is not itemized like we saw last time. It is important to show this detail, and you will be expected to show the detail on the exam. This schedule has just been simplified for presentation purposes. You'll notice that the last line on the schedule of costs of goods manufactured transfers over to the income statement where cost of goods sold is computed. In the last class, we saw that the cost of goods sold was just a summary of the finished goods T account. Again, a picture is worth 1,000 words. So if you can recall what the T account looks like, these financial statements will get easier and easier with practice. After you see the cost of goods sold calculation, you'll notice that this income statement looks very familiar to the income statement that you learned about in Accounting 101. In other words, you'll notice that the gross profit line item is calculated, and just as we did last semester, gross profit should be computed in dollars as well as a percentage. You guys should be pros at that by now. And then from gross profit, we take out the 2 types of period costs that we talked about last time: selling expenses and the G&A expenses. And once we take that out, we would get our pre-tax income, okay, net income before taxes. Again, if there are things in the other line item of the income statement, such as interest revenue or interest expense, then we would have a little bit more of a complicated income statement. But for our purposes right now, in this foundational chapter, we're reviewing what a basic income statement for a manufacturer would look like. Finally, on this slide, they show you that the current assets will look different from the balance sheet that you were asked to review in Accounting 101. You'll notice that there's more than just one inventory account. And you guys had a whole chapter on inventory costing in Accounting 101. But now you'll notice that there's, at a minimum, 3 different inventory accounts. You've seen all of these on the T account sheets that we used last time. The raw materials inventory is just what it says. It represents the amount of raw materials at any given time in the manufacturing entity. You'll see the WIP inventory that represents the inventory that is still under construction at any given point in time. And you'll see the finished goods inventory, which we liken to a big warehouse of inventory, where you will see the finished products that are on hand at any given point in time. So the main difference on a balance sheet is that you'll notice multiple types of inventory accounts. As I mentioned, today is mostly a review of the concepts that we discussed last time. This problem may be a little bit more detailed than the last problem was. So we're going to do several things today. We're going to review how to classify costs. We listed that as one of the critical objectives of the chapter. And then we'll take these same amounts and run them through the cost accumulation system, which means I'm going to use T accounts to show you how the costs accumulate and transfer from the balance sheet to the income statement. Another way of saying that, we're going to track the cost from birth till death. So again, the Excel files are also located in the modules link. I would encourage you to work through them either on your own after the lecture or with me as you watch the lecture. And as I scroll down here, you'll notice that I have, for simplicity reasons, just listed the costs going down the left, and will classify them in the columns that I gave you to do that. Okay, so the first thing I would ask myself, and by the way, this is similar to a test question, the first thing I would ask myself, is this a product cost, which means that the cost was incurred in the manufacturing of a product in the factory, or is this a period cost, which means it has no future benefit and it would be expensed immediately? Remember that product costs go through the balance sheet, eventually into the WIP account, but that period costs go directly to the income statement. Hence, it's very important that you learn to classify these correctly, because if you misclassify them, you will wind up with misstatements on the financial statements. So, number one, advertising. The only reason we advertise is to sell goods. That's an example of a selling expense. Let me go hit the capital so the X is bigger. You'll notice that the next three are depreciation expense accounts. However, they are related to three different items. One is office. As soon as you see the word office, that is an indication that it is a general and administrative expense. One is related to the sales assets or the selling assets. That would be considered a selling expense. But anything related to the factory, once again, is a product cost. Having identified it as a product cost, you ask yourself, is it a direct material or is it a direct labor cost? And if it's neither, then by default, it is a factory overhead, as it is in this case. Okay, raw materials, they mentioned that they were all direct, goes into the direct materials classification. When we use our T accounts, we'll increase our asset account called raw materials, but for classification purposes, it is a direct materials cost. Maintenance costs, there's a key word on the factory equipment. Circled the wrong one, here we go. On the factory equipment, anything related to the factory is a product cost. So it's not materials and it's not labor. By default, then, it is factory overhead. Once again, factory utilities. We know it's a product cost because it involves the manufacturing facility or the factory, but it's not materials, it's not labor. By default, then, it's factory overhead. Direct labor. That would be the assembly labor or the touch labor or the dirty hands labor. That is in a category by itself. That is exactly what direct labor is. Indirect labor, that little prefix by IN means not direct. So this would be occurring in the factory. So we know it's a product cost, but these would be by supervisors or other people who are not on the assembly line. Remember, the D's in both direct materials and direct labor stands for direct. By definition, then, this is indirect. You can't directly trace it to the product. You know the labor's in the factory and it was used in creating the product, but because it's indirect, it has to be factory overhead. I would write that down in your notebooks because that often causes confusion on quizzes and exams. Okay, the next one, number 10, office salary. As soon as I see that word office, I realize that it's a general and administrative expense. And then the next three categories are all rent, but you'll notice that the three rent expenses are for different parts or for different facilities. The office rent, again, as soon as you see the word office, tells you that that's a G&A cost. The selling expense, that would be on the retail facility or things related to the retail facility. That is going to be a selling expense. The factory, however, as soon as you see the word factory, you know it is a product cost, and so you're left with these three classifications. Clearly, rent on the factory is not materials and it's not labor, so it has to be factory overhead. Number 14, sales, salaries, expense. Key word here is sales, and so that would be a selling expense. Take a moment to look those over. If there's anything that's unclear to you, send me an email or come by my office hours and we'll make sure that's cleared up. In a moment, we're going to use the exact same categories, but we're going to track the costs from birth till death. Okay, let's move on to our next problem. You'll notice that the exact same data that we just finished with on the previous problem is now carried over to this worksheet. Again, I am using a T-account format to teach this material because it's going to simplify our lives going forward. In addition to the old data, which you'll see here in the bigger box, the author gives us some beginning and ending data for the inventory accounts along with some sales that wasn't included in this list of costs. So just as we did before, our goal is to track the costs from birth till death. So we've already classified them in the previous exercise, and I gave you the reasoning as for why they were classified the way they were. Now our goal is to use a cost accumulation system to track the costs from the time they are incurred all the way through to eventually landing on the income statement. Okay, advertising expense we mentioned was a selling expense. So I'm going to come over here to the selling expense category and put that amount in. These three depreciation expenses we classified three different ways. The depreciation for the office was a G&A expense. The depreciation for the selling equipment was considered a selling expense. I'm just putting short little abbreviations so you understand where the amounts come from. And the depreciation on the factory equipment was actually a product cost, and we classified that as factory overhead. So let me go create the factory depreciation. Factory equipment, I'll put factory depreciation. Again, it's abbreviated. Let me drop that in. You'll have to excuse me for the pauses. It's really hard to talk and type through the lecture, so please bear with me when you hear a pause. Okay, I think we got the three depreciation expenses in. I'm going to move this up so we can see some more of them. Raw materials purchases, that would be all direct materials. That would go to our asset account called raw materials, and when the purchases are delivered to the factory, our asset account's going to go up with a debit. Drop that in. Factory utilities, we said, was a factory overhead cost. So I'm going to accumulate all the factory overhead account On the debit side, in fact, I'm going to highlight that word actual. These would be the actual day-to-day, what we call hard dollar costs that come into play into the factory that are by their nature indirect. Okay, that brings us to direct labor. You can either record it just as a note here, or you can directly go into WIP and record the direct labor directly. They gave it to us. Indirect labor is a factory overhead account by the very nature of the word indirect. So let me record that on the debit side of the factory overhead account. We have some other labor expense, but it is in the form of office salaries. The word office implied that that was a G&A expense. So let me get that in. And here come those 3 different rent expenses that we talked about in the previous problem. So the office space would be a G&A expense. So let me put office rent, $23,625. The second one was sales rent on the selling space. We'll call that selling rent. $27,000. And the third one, that factory rent, is an overhead account. It is a product cost. It benefits the entire factory, but it's not directly traceable. So again, we use the factory overhead account. Whoops, let me fix that typo. And then let's keep scrolling. Sales salaries would be a selling expense. So we'll go ahead and enter that into the generic selling expense category. And now it comes time for that new information to put into our accounts. Let me move this bigger box out of the way and possibly move this up to prevent having to scroll off of your T accounts. Okay, so here we go. The beginning raw materials inventory was 40,375. The ending raw materials was 70,430. I'm going to go ahead and enter all of these items in, and then I'll go back and do the missing calculations. This brings us to the WIP account, the things that are under construction. We started WIP with 12,500, and we ended WIP, I do see the sales there, but since we're looking at the WIP account, we ended our WIP account with 14,100. Let me go back and capture those sales. The sales, just as in Accounting 101, is the major revenue source, even for manufacturers. So let me drop that amount in. You should double check me. 4,942,625. And let's see, that leaves us with the finished goods inventory to complete our balance sheet, starting and ending balances. We started with 177,200 worth of goods. Again, think about this big warehouse that has completed products in it. And we ended the period with 141,750. And I believe that covers the new information, so let me move that out of the way. So what's left are the yellow spaces specifically. Remember, the mother of all calculations, the most important calculation that we're talking about in this chapter is this cost of goods manufactured. So from a T account perspective, remember this. All product costs go through the WIP account. So in any type of manufacturing environment, I'm concerned that I capture all 3 of the various product costs in this WIP account. So you'll notice that although I have direct labor, I'm missing direct materials used and factory overhead. I have the data to compute it. So just like we did last time, we're going to run some computations to come up with those yellow boxes. If I were you, I would pause the video right now and take a moment on your own to see if you can compute those 3 yellow boxes. If you can, you're well on your way to understanding the material in the chapter. And if you can't, it doesn't mean that you should throw in the towel. It just means that you haven't quite practiced enough. Going back in and reviewing my work, I noticed that I wrote down the wrong number for purchases. So go change that. You may have written down the right number. As I mentioned, it's very hard to talk, speak, and work on Excel at the same time. So let me go fix that. We're looking at this number, which was written incorrectly on my T account. It's in the right spot. I wrote the number down wrong. 894,375. And then the one other thing, I believe I missed this maintenance expense for factory equipment. I neglected to write that in. For sure, that is a factory overhead account. So I'm going to put factory maintenance and make sure that I get that 30,375 in. And then I'm going to give you another few seconds to make those corrections. And then we'll go check these 3 boxes, these 3 yellow boxes. The goal is to get a complete WIP account with all 3 product costs in it, as well as calculating that all important cost of goods manufactured and cost of goods sold. So I'm going to pause here for a minute, double check what I've done so far, and then we'll finish this problem up. Okay, let's see how well you did. Let me subtotal, which is denoted by the red ST for subtotal, the available raw materials. You may want to get used to that wording. That's what your author uses. So materials that ran through the raw materials warehouse during the period was 934,750. Of that amount, there's $70,430 remaining. The difference between these two must be the direct materials that were used up. Let me go ahead and compute that. And I got 864,320. That is a key number because once the raw materials are used up and placed in production, you transfer them over to the WIP account. So I'm going to use a cell reference in Excel, which means I'm going to type in equals, click on the amount, and press enter to transfer over those direct materials used. We already have direct labor, so what's missing on our WIP account is the factory overhead. For ease of understanding, in this chapter, all we're going to do is total up the factory overhead, again notated by my red ST for subtotal. I'll add those 5 line items up. I got 391,775, and I'm going to transfer all of it out of this dummy account called factory overhead and over to WIP. So I'm going to just grab that number so I don't transpose it and transfer it out of factory overhead and into WIP. Okay, that brings us to one of the most important calculations of the entire chapter. Remember what WIP is. It stands for work in process or work in progress. You'll see the account both ways. And these are all the jobs that went through the factory during this period of time. The major goal on cost accumulation systems is to calculate this cost of goods manufactured here. So it looks like since my work in process account is complete and I have all three product costs, now I'm ready to make the calculation. I'm going to subtotal it by adding my WIP account from the top to the bottom. I got 1,831,095. Those are all the costs that went through the factory during this period of time. When I look at the ending balance, that means that there's 14,100 of goods or jobs that are not yet finished. So to calculate that yellow cost of goods manufactured, I'm going to take the difference between these two. What does that mean? It means that the difference between these two are the amount, or is the amount, of the finished items that were completed during the period. So I'm going to take the difference between that red subtotal and my ending balance, and I got $1,816,995, which is the correct cost of goods manufactured. What happens when the jobs are finished? They're transferred out of WIP and into finished goods because they're now sitting in a warehouse ready to be sold. That leads me to my last yellow box here, which is cost of goods sold. This represents exactly what it represented last year, and if you just say the word cost of goods sold, that's exactly what it is. This is the cost of all the goods that you sold during the period. That'll be used and compared against the revenues to come up with the gross profit. So again, cost of goods sold is a summary of the finished goods account. So I'm going to sum this up on the red subtotal line. I got 1,994,195, and I'll go ahead now and take a look at the difference between all the costs that went through the warehouse and the ending inventory, which means unsold. It's still sitting around in the finished goods warehouse. So the difference between these two amounts is our last yellow box, which is cost of goods sold. So let me compute it, and you can compare it to what you have. And I got 1,852,445. What we have just done is we've tracked the costs from birth. All of these costs started out on the balance sheet as either raw materials, labor, or factory overhead. All the product costs went through the WIP account. I hope that's in your notes several times. And eventually, as the goods were finished, most of them, and then eventually sold, we came up with the amount that's going to go on the income statement. And that's where the crossover between the income statement and the balance sheet takes place. Let me move this over a tad so that you can see cost of goods sold. Let me finish this up by grabbing that amount. And once the crossover here in my column O takes place, your costs have essentially found their final resting place. And that, in a nutshell, is the basics of cost accumulation systems. Now that we've completed the worksheet and we've completed all of the major calculations, let's take a look at how the formal financial statements would look. As mentioned, the legwork is done. We know what the cost of goods manufactured amount is. Now take a look at the formal financial statement, which is really a summary of our T accounts. So remember what the schedule of cost of goods manufactured shows us. The three components: direct materials, which came from the raw materials account, the direct labor, which was given, and the factory overhead account, which is just an itemization of the different overhead accounts. We summed those up, representing direct materials, direct labor, and factory overhead. And then we tweaked the balances for the beginning and ending WIP. Take a moment to compare the T accounts to the formal financial statements and make sure you understand how the cost flows. Again, as a reminder, the schedule of cost of goods manufactured is simply a summary of the WIP account that we've already computed in detail. Likewise, also take a moment to take a look at the formal income statement. The formal income statement has one major line item that is of concern to us, and that's the calculation of cost of goods sold. As we mentioned earlier, cost of goods sold is just a summary of the finished goods T account that we work so hard on. So take a few minutes, maybe even pause the video, to make sure you understand where every line item is coming from. The sales was given to us. The cost of goods sold was computed previously. You can see that carried over. The difference between those two gave us our gross profit. And from the gross profit, we subtracted out, it looks like in summary, our operating expenses. In this case, only two operating summations, this one for selling expenses and the one for general and administrative expenses. And that once again would give us a basic income statement through the net income line item. And of course, this is pre-tax since no tax rate was provided to us. Pause the video, consider rewinding a little bit back, and make sure you understand how those formal financial statements are composed. This is a key feature of Chapter 14, so I would encourage you to practice until you feel comfortable with creating a statement of cost of goods manufactured as well as an income statement. So let's wrap this up by looking at one last exercise that will help us visualize what's going on in these manufacturing accounts that we've spent now 2 days talking about. On the screen, let's look at the pink area, which your author entitles Materials Activity. And to help us solve this, I'm going to go back to my T account approach. So you'll notice that I created a T account for raw materials. I started off with the amounts that were given, which included the beginning balances and the raw materials purchases, as well as the ending raw materials. And you'll notice that there were two unknowns. And so my goal is to solve this by understanding how the T accounts work. The first item that the author wanted you to calculate was the raw materials available for use. So that's just a subtotal of the beginning materials plus the raw materials that were purchased. So I just computed that as 677,500. Think about a raw materials warehouse, and that's all the materials that went through that raw materials stockpile during the given time period. Of that amount, there's 175,000 left that is unused in the raw materials account. So to compute that direct materials used up, we're just going to take the difference between that subtotal and the ending balance, which was given, and we got 502,500. Okay, that same direct materials used is now going to be used to populate our work in process account. So I carried that over. We know from our study now for a whole chapter that the WIP account is the account that accumulates the product costs or the manufacturing costs. We know there's three of those: direct materials, direct labor, and factory overhead. The materials was just computed, the labor was given, the factory overhead was given, and there were two unknowns here. Your author calls the first unknown total work in process. Okay, well that's easy. That's just a subtotal of this WIP account. So I'm going to add everything that went through the factory there. I got 1,687,000. Usually the author has been requiring us to compute cost of goods manufactured, but he gave that to us right here. And so the last thing in the orange area that he's asking us to compute is the ending WIP. That would represent the items that are still in the process of being produced. How do I get that? I'm going to take that subtotal that we computed earlier and take out the cost of goods manufactured that was given to us this time. And when I do that, I get an ending balance in WIP of 93,500. Finally, in the gray-brown area, we're taking a look at sales activity. Remember that when goods are finished and transferred out to cost of goods sold, there's movement that takes place going from the balance sheet over to the final resting place in cost of goods sold. We've discussed previously that cost of goods sold is really just a summary of the finished goods. So on the screen, you'll see that I've created the finished goods account, and I've put in all the various components, some of which are given and some of which are missing. So in this case, the author chose to leave out the beginning finished goods balance. You'll see that here. He did give us the cost of goods manufactured. In fact, we carried it over from the previous computation. He also gave us the ending finished goods inventory, which we've inserted. And he also gave us the cost of goods available for sale, which you'll see here in red. So my goal then is to calculate the two question marks, the beginning inventory and the cost of goods sold. Okay, well, looking at the math on how the T account works, I know that the beginning balance plus the cost of goods manufactured gives us the cost of goods available. So I'll go back into the beginning balance by taking the difference between the items given to me. And the beginning balance of finished goods is 146,750. So to compute the last remaining unknown component, I'll simply take the difference between the cost of goods available for sale, that means all the finished goods that went through the warehouse, and the ending balance of the unsold items. So my last calculation will be to do just that. Take the cost of goods available for sale, subtract out those items that still exist in the finished goods warehouse, and you'll get the final item, which is cost of goods sold. Let me give you a moment or two to look over a neat, concise answer of the items that were missing, and take this last few minutes to encourage you to give this chapter the attention it deserves. As I mentioned before, it is a foundational building block chapter. What that means is, think of a group of cheerleaders creating a pyramid. If that bottom layer of the pyramid isn't secure and isn't strongly developed, it gives way and the rest of the pyramid comes crashing down. This chapter is critically important to your successful completion of the course. Invest the time at the front end so that you can complete the class successfully with a much less level of difficulty. I'm here to help. All you need to do is reach out. Let's get in there, and for the remaining hour or so of our lab time, let's practice, practice, practice. The only way you'll feel comfortable with the material in this chapter is to get your hands dirty and practice. This is Professor Johnson signing out.